Welcome back to another video here on Financial Friends. Thank you so much for joining me today for the dividend journey. If you are new to Financial Friends, this is a community of people who love personal finance, investing, and business related content. And that is what we create here. So if you want to stick around, hit that subscribe button and go ahead, hit that like button for me as well. It takes just one quick second and it does tremendous wonders for the channel. I greatly appreciate your support. So today we're going to be updating the dividend portfolio. You saw the title, we added a new stock. We're going to talk all about that. So let's just go ahead and get into it. First things first, you can see here on the left side, I have some little pieces of paper that I've taken some notes on. Obviously, this is like on my iPad, right? It's digital, but this is about as big as it gets. So I'm going to make myself bigger, and this is going to be over here on the left side of the screen. But we have the dividend journey portfolio, and as you can see here, this was before we did any additions last week. So you have our dividend yield, you have our yield on cost, our income, our annual income, and the size of the portfolio. You also, if you want to take a second here, I'll zoom in a little further. This was the actual portfolio breakdown, numbers of how many position or shares we had, stock price, etc., etc. But what we did is we added, because this was a major dip, you could see the indices all down big again today, Monday the 9th. I don't even remember what day we purchased, but we purchased last week, so we were in the red. But we went ahead and added $5 of every individual stock, that being Apple, John Deere, Johnson & Johnson, 3M, Realty Income Corp, and Waste Management. We added $10 to each of our ETFs or index funds, FISROX and SCHD. And we added $55 of our new stock, Hershey, which is currently our smallest position. We also got a 6-cent dividend from John Deere, so we might as well throw that in there as well. But we made those additions. So what does the portfolio look like after? Well, here is that update. You can see the difference in the yields, the yield on cost, the income, etc. You can also see the new position added down here, Hershey. And then our dividend yield dropped slightly because of that addition. Our yield on cost dropped a little bit as well as those stock prices are falling. We're buying back in. That's going to hopefully continue to go up over time. And then our May income spiked 4 cents and our annual income up $1.90. Fantastic. We love to see that. So let's go ahead, exit this out. Let's make myself smaller. Let's get into the portfolio as it stands currently. So you can see here is the dividend journey portfolio as it currently stands. We have our stocks. We have Hershey. We're down basically everywhere, right? It's red times. Again, the indices, everything's red. Now we do have a little bit more stable of a portfolio as a whole. Our stocks tend to have a low beta, which means they have low volatility relative to major indices. The Dow Jones being down 1.99% means that a lot of our positions were probably down today, but we're still up 5.5% on J&J. We're still up 0.3% on Waste Management, and we're only down 0.1% on Hershey. All the other positions down 2%, 6%, 7%, 8%, 10%, 4%. I am not worried about it. We're going to continue to average in. Now, the new stock, Hershey. Why did we buy it? What are we doing? What is happening? Okay, let's get into it. So here's Hershey's stock. Here's its chart over the last little bit. You can see over the last week here. Let's go ahead and pull that up. It's still climbing, right? It's still climbing. Now, over the last year, this was a key factor as to why I purchased this stock and why I purchased it now, I should say. You can see the growth. In a time where nothing has grown, everything has been falling, this stock has continued to climb. Why? Why is it continuing to climb? Well, it's kind of inside of its own little world with inflation, with supply chain issues, right? We have chocolate. This company is a chocolate company. They produce all different types of chocolate products. You can go ahead, read them all here. I have a post on Instagram and Twitter. Check that out. It shows all of their holdings, but a lot of big ones. Jolly Rancher, Almond Joy, Brookside, Barkton's, Cadbury, Kit Kat, Hershey, Hershey Kisses, Twizzlers, Payday, Rolo, Heath, Whoppers, York. They also just added Dots, which is a pretzel brand. So this company has a ton of different things underneath its umbrella, but notice the pricing of these products. What they would normally be priced at. They're cheaper products, right? They're not as expensive. A Hershey bar runs you a couple dollars, bag of pretzels run you a couple dollars, and these are high velocity items that you finish very, very quickly. You go, let's say, to camp. You buy a bunch of Hershey bars. You eat them all on the first night because they made s'mores. Or you buy Skinny Pop, another one of those products. You open it up, the popcorn's going to go bad, so you eat it fast, you go buy another bag. High velocity products that are continuing to move at low price points means that even with inflation running rampant, even with supply chain issues, they're going to continue to pump these products out because they're in small quantities, small bags. People are going to continue to buy them, and hopefully as they can continue to keep the price down, consumers will keep buying them. So I looked at this and I said, when am I going to get a good opportunity to purchase this stock? I'm going to get a good opportunity to purchase it if it ever dips because of inflation, because of all of the things that are happening in the market. But what's happening? Inflation. And the stock is still rising. So I bought in. And I figure that if over the next couple of quarters, over the next year, this stock just flatlines or manages to even fall, that would be a good time for me to continue to buy into the stock, and that's what I'm going to keep doing. So I'm hopeful that it might never go down. It might just continue to run because that's what it's proven it's able to do. But it also might stagnate or it might fall as those inflation fears, as those supply chain issues catch up, as they maybe have to raise prices, right? Maybe velocity slows down, people stop buying as many products. So that'll be a good building time for me, but I didn't want to hold off. Now, the financials of the company. It's a big company, right? $46 billion market cap. It pays a 1.61% yield on a 43% payout. We like to see that payout ratio under that 60%. It fits that bill. Now let's go ahead and take a look at its outstanding shares. Those have continued to drop. That's a fantastic sign for me. Revenue growth, just the opposite of drop. It has continued to raise. EPS has continued to go up. Net margin has actually moved up as well. And then we can take a look at the dividends. The yield has continued to increase. I think this is their 13th year in a row paying dividends. Free cash flow bouncing around, but still continuing to kind of rise over time. That's great as well. Hopping back over there, a few small causes for concern. All that other stuff, positive. Low beta, we like those low beta stocks, right? We talked about having a low risk portfolio. This fits that bill. Again, closer to one you get means you're matching the S&P 500, basically, price for price or weight for weight, right? You're moving right with it. This is not necessarily moving with it, right? Closer to zero means it's kind of flatline. It's relatively stable. It is a bit pricey. That's the one problem with this stock. Also, they have a little bit of a current ratio problem. We like to see that current ratio at least over 1, potentially over 1.2. This is not where it's at. Now, I'm not super worried because they have made some acquisitions of some companies recently, right? They've purchased Dots recently, which is a pretzel company. So I'm not super worried about that. This company has kind of fluctuated in that realm of around 1, a little bit lower. Again, like I said, not a big cause for concern. PE ratio, however, is a little bit cause for concern. The average sort of PE ratio is around 15. We like to see in that 20 to 25 range, hopefully lower. We're not picking this stock up at a steal right now. It is pricey, but we talked about that already. We addressed that concern. I'm not worried if the stock continues to fall because, again, I'm kind of expecting it at this point. Now, I spoke to their products, but again, I always talk about know how a business makes money. We talked about all the ratios, the numbers, and things like that. What does this brand actually produce and actually do? That's the fun part, right? That's buying a company that you think is cool, that offers, niche, cool products. That's what we like to look at. So here you can see their whole kind of lineup of things. This Hershey in general is going to be the Dots, the Skinny Pop, and the Pirate's Booty. That's kind of the overarching theme that Hershey has. But then you can see the Pocky as well, and then the One Bars and Lily's. But if you want to go into Hershey's candy, let's go ahead and search that up. Hershey's candy brands. This is the real kicker. The company has an absolute massive moat. A massive moat in this. I mean, look at these brands. These are brands that everybody has consumed when they were a child. Everybody continues to consume. Fifth Avenue, Almond Joy, Bark Thins, Breath Savers, Brookside, Bubble Yum, Cadbury, Good and Plenty, Heath, Hershey's, Icebreakers, Jolly Ranchers, Hershey Kisses, Kit Kat, Milk Duds, Mounds, Mr. Goodbar, Payday, Reese's, Rolo, Score, Symphony, Twizzlers, Whatchamacallit, Whoppers, York, Zagnut, and Zero. These are all products I'm sure that one of us, unless we have an allergy or something, we have probably consumed one of these products. And what excites me about this brand and this stock and this company is candy has been their bread and butter forever, but they are expanding outside of that. Lily's is obviously a candy. However, it's a more premium candy with not as much refined or processed sugars, right? It's a more natural sort of take on candy. This is not that, right? But the one protein bars, right? Getting into maybe a little bit into the fitness snack realm, but the salty snacks, the Pocky chips, Pirate's Booty, Skinny Pop, and now Dots Pretzels is really what excites me for the future, because this company is still continuing to get new SKUs and get new products and acquire already established successful brands that they can just kind of throw under their umbrella, and they're not only a candy brand. So that's why we added Hershey's. That's why I'm excited to continue to buy into Hershey's. And even if it continues to fall, continue to buy in. Let's check in really quickly on the diversification. We're going to be adding ETFs over the next little while. It's not going to be exciting and new and fresh and fun, but it is required of this portfolio to keep it at about 50% ETFs. We're only at about 40 right now. We have our smallest position, like I mentioned, in Hershey. That food products position there is Hershey. But again, ETFs, adding over time, buying Hershey, even on its dips, even if it stagnates, even if it goes up, we're just going to continue to average into our portfolio like we have been doing. So let me know down below what candy is your favorite from Hershey's. Let me know if you've never had Hershey's candy before, if you like the stock, if you don't like the stock, if you like what we're doing with the portfolio. Drop it all in the comments below. Thank you so much for sticking around, listening to me ramble about the new position. And I hope that you all have a very, very fantastic day. The next couple of videos that are coming out, I will be on vacation, so I might not be as active everywhere on social media. But again, leave comments. I'll probably see them. Who knows, at night I'm probably going to be scrolling through everything. So thank you so much for liking, subscribing, commenting down below. I will see you on the next one. Take care.